1. Deposit account. A deposit account is a type of bank account where you can deposit money for safekeeping. A deposit account is like a financial piggy bank where you stash your cash for safekeeping and maybe earn a few peanuts in interest. 2. Checking account. A checking account is a bank account that allows you to deposit money, write checks, and make electronic transfers. A checking account is like a financial GPS for your money. It helps you keep track of where it's been and where it's going. 3. Savings account. A savings account is a bank account designed for storing money over the long term. A savings account is like a financial time capsule. You bury your money today to dig it up tomorrow, hopefully with a little extra treasure inside. 4. Interest rate. An interest rate is the amount charged or earned as a percentage of an amount of money over a period of time. An interest rate is like the flirtatious wink of the financial world. It's the sweet talk that convinces you to leave your money a little longer for a bigger payoff. 5. Loan. A loan is a sum of money borrowed from a lender with the agreement to repay it, usually with interest over time. A loan is like a financial lifeline when you're drowning in expenses. It throws you a rope, but be careful not to tie yourself in knots. 6. Credit card. A credit card is a plastic card issued by a financial institution that allows the cardholder to borrow funds to make purchases. A credit card is like a financial magic wand. It lets you buy now and worry later. But beware the spell of debt. It's like having a genie in your wallet. Just be careful what you wish for, or you might end up with a mountain of bills instead of 3 wishes. 7. Debit card. A debit card is a plastic card linked to a checking account that allows the cardholder to make purchases or withdraw cash. A debit card is like a financial Swiss Army knife. It's versatile, practical, and always there when you need it. 8. ATM. An ATM is a machine that allows users to perform banking transactions, such as withdrawing cash, depositing checks, or transferring funds, without visiting a bank branch. An ATM is like a financial vending machine. It dispenses cash instead of snacks, but the cravings are just as real. 9. Overdraft. An overdraft occurs when a bank account balance goes below zero, allowing the account holder to continue withdrawing money or making payments. An overdraft is like a financial tightrope walk. One wrong step, and you're plunged into the abyss of fees and penalties. 10. Interest. Interest is the cost of borrowing money or the compensation received for lending money, expressed as a percentage of the loan amount or investment. Interest is like the rent you pay for borrowing money. It's the cost of admission to the financial fun fair. 11. Principal. Principal refers to the original amount of money borrowed in a loan or the initial investment amount in an investment. Principal is like the captain of the financial ship. It's the original amount you borrowed, steering your loan toward its final destination. 12. Credit score. A credit score is a numerical representation of a person's creditworthiness, based on their credit history. A credit score is like the report card of the financial world. It grades your creditworthiness based on your past financial behavior. It's like the popularity contest of the financial playground. The higher your score, the more friends you'll have in the lending club. 13. ATM fee. An ATM fee is a charge imposed by a bank or ATM operator for using an ATM that does not belong to the account holder's bank. An ATM fee is like the toll you pay for the convenience of accessing your own money. It's the price of admission to the financial express lane. 14. Compound interest. Compound interest is interest calculated on the initial principal and also on the accumulated interest from previous periods. It results in the exponential growth of an investment over time. Compound interest is like the snowball effect of the financial world. It starts small, but with time and momentum, it grows into a financial avalanche. 15. Collateral. Collateral is an asset pledged as security for a loan. If the borrower fails to repay the loan, the lender can seize the collateral to recover the outstanding debt. Collateral is like the security deposit of the financial world. It's the backup plan that lenders rely on if you can't repay your loan. 16. Online banking. Online banking refers to the use of internet-based services to access and manage bank accounts, such as checking balances, transferring funds, or paying bills. Online banking is like having a financial butler at your fingertips. It handles all your transactions with a few clicks of the mouse. 17. Wire transfer. A wire transfer is a method of electronically transferring funds from one bank account to another. It's often used for large or international transactions. A wire transfer is like the express lane of the financial highway. It's the fastest way to send money from one account to another, but it comes with a hefty toll. 18. Bank statement. A bank statement is a summary of transactions and account activity issued by a bank to an account holder over a specific period, usually monthly. It provides details of deposits, withdrawals, and account balances. A bank statement is like the financial report card of your account. It shows you where your money has been and where it's going, but there's no great inflation here. Subscribe for more explained videos.